Hey guys, welcome back to an episode of our weekly forecast. It's obviously been a while since we've been back, since December. A lot's happened since then. Obviously, we've had the next wave lockdown in the UK, and overall, to be honest, there's not been much movement in the currency side that we wanted to really comment on in early January. So that's why we've come back now. Obviously, we're doing a completely different approach because we can't go to the studio due to lockdown. So we are on Zoom, and we're going to be going through quite a lot of interesting stuff today, from FX pairs, the currencies, stocks. We're actually going to cover some really interesting sentiment move that we've seen in the markets as well throughout January, and actually a broader picture of what's happening in the investment space. So guys, don't forget to thumbs up, comment and subscribe, and make sure you get in the comments, because obviously it's our first video back and it is going to count. So let's get started on FX forecasting. So Euro US dollar daily, actually we left this last year with this level up here being the main resistance that was looking at for it to break through. We saw that come through into mid-December, and we saw price pushing high. We're actually starting to see the moving averages have now turned to the downside. We've had that sort of a major peak there at I think it's around 1.236, and then we saw price have a pullback. We've got the high, we've now got the lower high. It'd be interesting to see if we see further downwards pressure coming into this, into euro against the US dollar. And we've got that resistance at around 1.2055. You can see over here on the right hand side. And I think now we're going to potentially see another lower high formed and price breakdown. If not, we're going to see the alternative of this high getting taken out and the moving averages transitioning and moving back high. So with Euro US dollar, and I think most of the time in our 2020 FX forecast, Euro US dollar was always a weird transition pair that we always were in kind of indecisive on which way the market was moving with this. But yeah, we've got this sort of level here again on the bottom end of the range, and we've got this high here that we're keeping our close eye on, although we are looking at short sells on euro against the US dollar. So let's jump down to the 15 minutes. So as you can see, it's been pretty choppy on the 15 minutes that we can see here. You know, price has been going down and moving averages has been going up, and they come close again. They've now just switched over, looking at it on today from a Friday point of view. I've tried to highlight these sort of, you know, high here sort of turning when the trend was down, followed by a lower high, another lower high, and then we've had a little bit more of a consolidation period, forming this sort of resistance zone around this level here. And actually what I'm going to do, a cool thing about being remote, what I can do is I can actually annotate on here as well. So we've got this sort of zone around here that's the main sort of area of interest that we're seeing, and I want to see if this level holds. And as you can see, it's more of a zone along this sort of period along here that we're focusing on. So if it breaks out above this area and we see a break of R1, this could be that move up that we was talking about on the daily zone, if it takes out that high level. So that's something to be cautious of. Again, keeping a close eye on this today and just seeing how this pans out. Overall, our view is to the downside though, so that is something to take into account there overall. And again, we'll be watching this main low level, which is our weekly low price at this moment in time, and see if we breach that support zone on the euro dollar side. Okay, let's jump over now and look at pound against the US dollar. So we're looking at pound against the US dollar, and actually ever since we kind of passed the main news about the Brexit side of things, and we started to see the fundamental side of the Brexit agreement start to pan out and have a sort of clear, decisive move forward for us as an economy, we've really kind of just seen pound against the US dollar steadily increase, moving to the upside. And we could see that really when Let me just draw them on. From these levels around here, you can see that we've been looking at these main points here, where you can see price has just been moving gradually up, and you can see these low levels, how we've been having these these little pin bars, prices spiking down, and then it's been moving and retracing straight back to the upside. The moving averages have really been intact all the way pretty much since 4th of October around this sort of zone here. And price has been continuously moving up nicely, and it's been rejecting that sort of 21 moving average quite nicely, just dipping into it, rejecting it and coming back up. So I'm expecting just a gradual increase to keep moving on pound dollar to the upside. That's pretty much what I'm looking at. So obviously on here we're now on the 15 minutes. You can see it looks a lot choppier than it does on the daily. Again, I put this down to a lot of it to do with it being January, low volume in the markets, and again that's also reflected in the daily price just gradually increasing. So probably trading on the hourly is more preferable than the 15 minutes at this moment in time, because the moving averages on the 15 minutes aren't really well respected, I would say, in this sort of area. Again, drawing back on here again, we can see that we are getting these sort of levels starting to form here, moving price to the upside. And again, my drawing is going to be awful if I try drawing the line, but we can see there roughly a trend line moving to the upside. And I expect price, here to go up, hopefully either touch the weekly high price and then come back down, form a nice pullback for us to join back in on this movement to the upside. Again, I think we've kind of hit the sort of, the news side of things quite nicely now with the fundamentals. I'm sure Elliot will cover that a lot more in detail when it comes to Elliot and the fundamental side of things. But, we've obviously hit that point now where there's not too much else that can really go wrong with the economy other than extended lockdowns and vaccine issues. When we look at the Brexit deal, it's kind of all sort of, starting to settle in now, and we are starting to see that progress move forward. So that's pound dollar. We are looking at a buy. We are expecting it to be choppy, so using wider stops throughout the remaining period of January, probably the first week or so of February, just whilst we're waiting for volatility to start coming back in, being less choppy, and focus probably not on the 15 minutes too much, but more on the hourly in that period of time. Let's move on to US dollar against the Japanese yen. So I've actually put in a chart here from early December from where we've been talking about this. And overall, we've been seeing, a strong move throughout the entire year of 2020, coming from all the way up here, trading at, 112.63, all the way down to the lows of nearly 100.93 at the low scale that we've seen there. We've just been seeing price gradually move down constantly. Now we hit that consolidation period, and there was this whole sort of war on China and trade deals, import export issues. And I was always a strong believer that once Biden came into power, that obviously that's going to start changing. And we might start seeing the US dollar starting to strengthen. And that was discussed. I discussed that in my weekly lessons with my students in there. And I think that's starting to actually happen now. And that's quite an interesting aspect that we've got here pictured. And you can see that we had that sort of high downwards trend line in play. And we had that sort of support level that was in here as well. And with price moving down, we had price moving down throughout all these different periods, and respecting these levels, and carried on making lower highs and lower lows, should we say. You can see that here, but I think that's now actually starting to change, and we're seeing a move that could be reflecting that. We saw the crossover happen here. You can see that. And we haven't really seen that crossover really until since September. But this time it's done it in a very strong upwards movement. So I believe now that we're going to start seeing this starting to move higher again. And I think that we could be looking at seeing price in 2021 potentially reaching around 107, if not 108. back to sort of June levels of 2020. And so that's my overall daily analysis on US dollar against the Japanese yen. So looking for buys for the first time in, probably since, going all the way back to May level before, when the trend was actually moving higher on the daily. So completely different turnaround for us on this, and overall looking at buying positions on the US dollar against the Japanese yen. So when we go down to the 15 minutes, we've seen a really strong surge and change in price. You can see that here. If I can see that we changed our moving averages and crossed over here, and then we saw this huge spike upwards in price, and we see the price moving higher. We had a small little high formed here. Price broke through that. It's been respecting that as now resistance turned support and moving higher, and it comes back down, tested support, got a lovely cluster entry here, long back to previous highs. Was a great setup trade that we saw yesterday, and that we're seeing sort of that repeat history again, with that high now being resistance turning into support, and I'm pretty sure we'll probably see that be tested or broken over the course of the next week period. So it's definitely a level to keep an eye on, and that's over here is 104.44. We've seen price just gradually move higher now, and we're seeing this sort of strength come back into US dollar against the Japanese yen, and I feel that we might see some potential entry zones back at around these levels here, where we could see price join back in and move higher on this movement on US dollar against the Japanese yen. So overall, we've got some great outlooks there on the FX side moving into February. And it's really, really exciting to see that from an FX side. We're going to move over and have Elliot discuss a bit more about the fundamental side of things now. And we'll be able to discuss that a little bit further on what we think is going to be happening on that fundamental side. So over to you, Elliot.
Yeah, it's nice to be back on FX Weekly, albeit at home. Not quite the same vibe as being in the studio. But first, I thought I'd start with a little wrap up of what's happened so far this month. So we're at the end of Jan already, and a lot's happened, sort of carried on from last year. So obviously, first things first, we've seen new President Biden come in on the 20th of Jan. Obviously, in the build up to that, there was quite a lot of rioting and worries about how the inauguration would go. However, it went pretty smoothly in the end. And since then, we've seen him announce his plans for his stimulus deal. We've seen the $600 checks. He now wants to get an additional $1,400 checks out to US citizens. We'll talk about a bit more about that next in the next sort of part of this section. We've also seen start of the year very strong for equities. We saw the FTSE 100 rally up to almost back up to 7,000. Dow was printing fresh highs, as was Nasdaq and the S&P. However, we've seen a lot of volatility this week. Again, we'll touch on that a bit later in this episode. And most of those gains have already been erased from the last sort of few days of the week. We've seen crude oil continue its rally back above $50 per barrel. And as Sam mentioned in his part, we've seen a strong start to the year for pounds since the Brexit deal happened, and it's pound has pretty much carried on decent momentum, probably one of the best performer currencies so far this year. Bitcoin's been another interesting one. So obviously we saw it hit $40,000 per coin, and then it sort of had quite a strong pullback, was trying to break back below 30,000. However, the bulls kept it above that. We saw a few little rebounds off 30,000 up towards 34,000. However, on Friday, we saw Elon Musk update his Twitter handle to include Bitcoin, and that literally, you'll see it from that 32,000 on the right. Yeah, that one bar in about 15 minutes, it went from 32,000 up to 38,000 just because he updated his Twitter. I mean, this is the influence that Elon Musk now has. He also was tweeting about a game. I think it's called. I'm not really much of a gamer, but Cyberpunk, I think it's called. and the parent company that owned that, their share price was rallying as well, just because he was tweeting about it. So he has a massive impact on the markets. So definitely, if you're on Twitter, definitely should be following him if you're not already. So yeah, I just wanted to show that's pretty crazy move there. So we're now, probably going to see Bitcoin make new highs, I'd say. I wouldn't bet my bottom dollar on it, but it looks, now it's sort of held that 30,000 level after we saw it break through at the start of the year. I think now it's good to go back above 42,000 on its way to $50,000. I can see that happening in the next month or so. So obviously vaccination programs well underway now. So the UK were one of the first to get theirs underway. However, there's been a few hurdles. AstraZeneca having issues with the delivery in the EU particularly, and the EU are now trying to stop Pfizer from getting deliveries into the UK. So there's been a bit of issues around there. We've also seen some issues in states in the US, particularly in New York and Texas, having to postpone their vaccinations because of delivery issues. So transit problems, obviously has to be stored at freezer temperatures, these two particular vaccines. So the vaccine program, is well underway. These are the number of doses that have been administered as up to the 28th of Jan, so on Thursday last week. So the US is well ahead at nearly 25 million. These are just single doses, so this doesn't necessarily mean that's the number of people vaccinated. Most of the vaccines at the moment, well, all the vaccines are out at the moment, are 2 doses required. So obviously the UK is third with nearly 8 million. Like I said, I just want to show well underway, but there's still a very long way to go. Yeah, so moving on to this week, what we've seen so far this week. First thing I want to cover is the rise of Wallstreetbets on Reddit, and in particular GameStop, the GameStop stock, that's quite hard to say, and sort of the retail versus hedge funds battle that we've seen. The retail traders taking on the hedge funds who have been short selling these stocks. So, I mean, what are the numbers at now on the Wall Street members?
I can really check. But whilst we're talking, actually, AMC is just passing through 14.2.
Back above 4. So the open's actually in 10 minutes here, isn't it? So pre-market trading.
We'll probably able to cover some of that as well. The numbers that we're looking at the moment. Let me have a quick look. So I was but yeah, the numbers have been going up massively. Early this week, I think on Monday, it was 2.7 million. When we was looking at 2.7 million, and it shot up to nearly 3 million, but it's currently sat at 5.9 million people.
Wow.
So, and that was yesterday. It was only on, I think, 4.
Yeah, just crossed over 4, didn't it? 3.9. Then
yeah. So heavy movement, and so now we're sat in this scenario where there's 5.9 million individuals that are all discussing what they want to trade. It's a very big movement.
Yeah, it's all over. It's all over the media. It has been for the last, probably since Tuesday. And obviously on Thursday we saw Robinhood disable trading on GME, AMC, and a couple of the others, which again caused absolute uproar. And we obviously saw strong selling because no one was able to get into these stocks. However, back now they announced on, it must have been Thursday evening, US time, that they were going to enable trading again. And the reason that they disabled trading was because of operational and more liquidity issues. They had to borrow, I think it was up to $1 billion in order to pay additional capital requirements. So for the to basically settle and fulfill these trades, because of the insane spike in volume that led to the big spike in volatility, meant that their requirements for their counterparty risk had to increase. So they had to borrow, well, I've seen numbers up to $1 billion from banks in order to cover these trades. So that's why they're saying they had to disable it. Whether you believe that or not, there's a lot of stuff going around that the market makers were making Robinhood disable these trades to allow them to get out of their short selling positions. I think
it's crazy. Like, you had CNN reporting that they want to halt the trading so that that these hedge funds can rebalance their portfolios. Could you imagine a retail trader saying, "Oh yeah, can you just hold the stock, please, so I can just rebalance my portfolio"?
Well, again, it's a well, we saw. I think the issue here is that these big firms, if they're too big to fail, they disrupt the whole financial stability. It was like with the banks, I guess. Obviously, they're not anywhere near the same scale, but we saw when the big rallies were happening, and it was getting leaked to the press that these hedge funds might be failing. We saw a huge sell-off in equities over on it was on Wednesday, wasn't it? When when GME was rallying, up to $400-500 or whatever it was. However, Friday pre-market trading, where we're at now, we're seeing them bounce right back since Robinhood have announced that they'll enable trading on them again today. So it's going to be interesting over the next few days, next week or so, what happens. Will this be something that lasts, or will this just fizzle out? It's interesting to see what's going to happen. How long are these retail traders going to hold these positions? If they start seeing 100-200% returns on a large number, and then you see people exiting, is that going to cause a mass exit, and it's just going to drop all the way back down to where it was?
Overall, you can kind of read the sentiment as well from the Wallstreetbets group, and it's like, this morning there was an article in there from the Wall Street Journal, like you were saying in your notes there, that Citron Research said on the Wall Street Journal today that it's basically they will discontinue short selling reports as a video posted on Friday. So basically now they're not going to be telling people what they're doing, so they don't get absolutely hammered, basically.
Yeah, exactly. Yeah. So they're saying they're going to focus on buy side only. Because obviously they were sort of one of the main ones that were targeted in the first place. We've also seen Robinhood disable instant buying of cryptos. I think partly because of, I think Dogecoin's up 800% today. Again, Elon Musk tweeted a Doge magazine cover taking the mick out of Vogue, caused Dogecoin to rally 800%. You can still trade on Robinhood cryptos. It's just if only on funds that are cleared. So whereas before they were allowing instant deposits, you could instantly buy directly, but now they've halted that. So yeah, it's been a pretty crazy market. Obviously, also seen Binance had to briefly suspend withdrawals because of a rush of new users. So I don't think this crypto rally is over yet. In terms of especially now we've seen Elon get involved. All his fans are going to be the ones that weren't in it already, probably rushing towards it. But yeah, like I said, this has had a knock-on effect onto equities. We're seeing some big sell-offs on Wednesday, rebounded on Thursday when these small stocks were selling off again as they weren't able to be traded. Anyway, and then overnight on Friday morning, we've seen another sell-off. And yet to see what happens on Friday when the US market opens. Yeah, it's interesting times.
It is. I think
it's getting a lot of news coverage. I was just going to say, retail trading is, it's so easily accessible now compared to what it was 10, 15 years ago. It's just, the power of the people is a lot stronger than what it was before. Whereas, you wouldn't dream of taking on a hedge fund, trying to short squeeze a hedge fund or multiple hedge funds, just as a retail trader. Whereas now we've seen it with Tesla, which was one thing, and now we're seeing it with these small.
Yeah. And especially a lot of people are asking as well where to actually be able to buy GME and AMC. Now you can get on Robinhood, but a lot of the traders that we've been, monitoring online have been moving over to what we call Webull, which is a lot where the US guys are now moving over to, where they're accepting trades on GameStop. But this just shows you the sheer power of uprising, I suppose. It's almost a revolution in the industry of been actually taking on these hedge funds, the guys that have got the billions. But we was working it out, and there's some rumors passing around that the average sort of US investor has about $6,000. Now, even if we rounded that down to half of that amount, and we said it was $3,000, if we're looking at the membership group is soon approaching, we're looking at 6 million people, right? So 6 million people times roughly a $3,000 investment puts the power of that Wallstreetbet group at roughly 18 billion. So when we look at that as a figure, that just shows you the sheer power. It's almost like a hedge fund in its own right taking that on, and that group size has doubled in that. And that's saying if they were only $3,000. We have seen obviously investors in there. Some of them are at 11 million. Some have got 100,000 invested, 500,000. So that's just on the minimum scale that I would suggest that's the size of Wallstreetbet. We're probably looking at, it's probably double that, in between 18 billion and 36 billion. And that's a huge amount of power that these guys can pump into very few instruments. They're targeting GME, they're attacking AMC to push prices up, and they're looking at BlackBerry and also Nokia as well. And it's like those 4 stocks over that size of it, you've got to imagine it's between 18 and 36 billion getting shoved into this.
Here we go. So, yeah, this is literally just come out. The SEC, the Commission will closely review actions taken by regulated entities that may disadvantage investors or otherwise unduly inhibit their ability to trade certain securities.
And that shows you that
that's good. So that's obviously positive. So
price is now shooting up. We're nearly hitting the $15 now, Elliot, on AMC there. So
opens in 1 minute, right?
Yeah, mine's showing my pre-market profits now. I was minus £8,000 on there. I'm now up plus 4,000. So, my alert's just kicking off there on the open. Past our entry level there, we're upticking quite nicely on that. So that's quite interesting, moving up to that sort of $15 mark there on AMC. So giving us a real insight to how powerful this group is, because that's my position. They're turned around by 12,000 in the space of in the space of the day, really. Not even that over market holding position. So it's definitely something that we want to be watching and tracking throughout this week. And I think this is the start of this. I don't think this is going anywhere. I think the sheer demand of nearly 6 million people trying to get in free stocks is causing a lot of brokers a lot of issues. I mean, Elliot can vouch for that. We've seen IG struggle. We've seen a lot of the UK brokers struggle. And I think we're now seeing that in
Trading 212, IG, obviously Robinhood. Yeah, there's a lot of issues, isn't there?
Seeing it across the board now. And that's overall now my position, Elliot, just absolutely flying up at $16 now. And I'm currently speaking, we're sat up roughly £6,500 now. So I think that's very, very interesting to see just how far this is going to move and what we're looking at. Very interesting, very, very interesting indeed. So guys, I think let's move on whilst all this craziness is happening. Over to you, Elliot.
Yeah, so it's nice to watch. So obviously lockdowns have been prolonged, especially in the UK. We've also seen more COVID variants coming out, particularly the worrying one is in South Africa. UK isn't looking too bad in terms of the results against the vaccines. So we had some more trial results out on Friday. Johnson & Johnson, interested in their results. The efficacy is actually lower than the other ones we've seen. But however, their vaccine is one single dose rather than multiple doses, and the vaccine can also be stored at refrigerator temperatures for several months, as opposed to it doesn't have to be kept in a freezer as like Pfizer's and AstraZeneca's do. So the market initially took this quite badly. These results that came out Friday afternoon. However, it sort of flipped round, and they're looking to go for emergency use in early Feb. So positive news again overall for the market in terms of another vaccine out there. We've also had Novavax come out their part 3 of the UK trial with an efficacy rate of nearly 90%. So again, more supply into the market, which means they'll be able to get distribute these vaccines hopefully quicker and more efficiently, which overall again is going to be positive for the market. Hopefully get economies back open again quicker, and get back to normal life, as it were. But yeah, like I say, the South African strain, again, if you look at these efficacy rates, so with Johnson & Johnson, it was 66% overall, whereas the effective rate in the South African strain was only 57%. Novavax, 90% overall in the UK trial compared to 60% in the South African trial. And then Moderna came out and said their vaccine is likely to be 6 times less effective on the South African strain. So overall good news. However, as we see these more and more variants develop, and we see their sort of restrictiveness against these vaccines, it'll be one definitely to keep an eye out on. And I think it's still going to be a rocky road. All it takes is one variant that and the vaccine is not effective against, and we're almost back at square one. Are we? And then the governments, they're going to have no choice other to go back into lockdowns and stuff. So hopefully that doesn't happen, but it's definitely a potential possibility out there at the moment. So looking on at some of the charts, this is a Dow Wall Street. So yeah, like I say, this is the hourly chart, and if we start over in Jan 2021, we're pretty much back at where we were around the 30,000 mark. We did see a strong rally up into new highs of 31,200, which then for a week, 10 days, the market was just sort of range bound between 30,800 and those new highs. And then we saw towards the start of this week, we started to see the new lower highs coming in, lower lows. And then I think that what caused the market to absolutely tank down was that news that we're talking about, the Wallstreetbets, the rise of that investor, and really causing the market to sell off quite dramatically. I think it was the biggest sell-off we've seen in the S&P since October, I believe. However, then Thursday, obviously, we saw the restrictions come in on trading, and the market had a quick rebound. However, when Robinhood came out and said, this is why we did it, and we're going to reopen trading back on Friday, we then saw another sharp sell-off in the market from, if you look at Dow, from that 30,940 level, which has been quite a key level in the market over recent weeks. And then now in the US Open and the market's selling off again, Wall Street's down 1.5%. Also want to have a look at FTSE. It's quite disappointing. I'm sure Sam will agree. Start to the year, Jan 2021, you can see on the chart around 6,500, and we saw a really strong rally, really great start to the year, and it nearly got back up to that 7,000 level that we haven't seen for ages. However, then the market, you can see like a triple top, if you want to call it that, around the 6,900 level. It just couldn't break back through that level, and then obviously similar look to it to the Dow from then on, really, and we're now back at where we were at the start of the year, which is it now a buying opportunity? I still feel that EU, UK particular stocks are undervalued compared to the US. However, I think there's still a lot of uncertainty around, like I was saying, about COVID and stuff. However, this could potentially be a good buying opportunity. You may want to wait, see if it comes back down to that 6,300 level where we saw big reaction back in December. However, it's already down 7.5% this year. Well, from the highs of this year, I should say, which is quite a nice pullback for the indice. Okay, so upcoming news, what's coming up in the week? We're going to see the Senate start their debate on Biden's rescue plan. So this is a $1.9 trillion deal that he's trying to get through to help the US economy. I saw some crazy stats. I believe it was around 30 million US citizens are unable to feed themselves, don't have enough money to buy food. I said that a really weird way, I don't know why, but yeah, so really scary. So we've seen the $600 checks go through at the start of the year, and now he's trying to add on an additional $1,400 checks. And obviously, now that the Democrats have majority in the Senate, albeit a very slim majority, they're confident that they can get through this check, and with or without the Republican support. So that should, if that goes through as planned, I believe that'll probably provide a nice little boost for markets next week. I definitely want to watch on. And then obviously start of the month next month. Going to have NFP next Friday. We've also got Bank of England interest rate decision next week. However, I don't expect any changes from that. They're definitely not going to start raising rates now in this environment. The comments we've seen are pretty much saying that negative rates aren't too possible at the moment, a bit tricky for them to do. So I don't think we'll see any change in interest rates there. And then we've also got a whole bunch of PMIs, manufacturing services PMIs, and then some retail sales out of Germany and Europe coming out next week. So going to be another busy week ahead. And obviously, you know, upcoming news is going to be what's going on with GME and AMC and the whole Wallstreetbets. Is that going to fizzle out? That some people were saying already, or is it, you know, you're on sort of Sam's wagon and you think this is just the start of a new revolution, new rebellion?
Yeah, I think it is. I think it is the start. Yeah, I think it's really interesting in regards to the whole sort of shift, and you know, like Elliot just mentioned about, I'm quite on board with thinking this is just the beginning. And the reason why I do think it's just the beginning, even whilst we was just talking, that group's gone from 5.9 million people to 6 million. So until I start seeing that group slow down in its growth and engagement, I don't think we're going to see. I don't think we're going to see the motion slow down at all. I'm interested to see what happens when, obviously, GME. I think if GME hits $1,000, I think that's where they want this to go. And I think that if they do achieve that, it's going to move quite quickly onto the next one from the big guys and the older, more senior people in the group that are saying we're now looking to do X, Y, and Z. And obviously, if they do hit that, their cash flow that they've just cashed out of is like, you know, 10 times more than what they had when they initially started. And so I can't imagine what the initial investors sort of position size would be. So I think this is just the beginning. I think this is,
they're going to put that in other places, right?
Yeah,
they're using these profits to put elsewhere.
Yeah, exactly. They're probably going to cash out and go, right, let's help out these other ones. Let's move towards, you know, Nokia, BB, and BlackBerry, and start moving that side. So I think this is something that's going to be unfolding over the next couple of months. I don't think this is going to be anything that, you know, disappears quickly. And as you just said about they're going to be looking into these firms that are stopping people from trading this. They're, you know, that's quite positive for this overall outlook. And this is changing the whole dynamic of social media and the power of individuals and their individual reach in comparison to a fund that is, you know, a few people making the decisions. This is a whole bulk flow. And there's nothing illegal with these individuals saying that they want to buy it. They're not buying this to push the price up and dump it. They're not doing that. They're saying that we're fed up of what Wall Street is doing. We're buying it because we want it to go to this price. They're not pumping and dumping this. They're not actively making a movement saying, make sure you buy this. This is a mass group of people saying, I'm buying this, da 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 da. I'm fed up of this. I'm fed up of the institutions. And they're pushing price to a strong level and showing that dominance in the market. And I think they're going to carry on and break through on that front. And you imagine that 100,000 people are joining that group each day. Even if 10,000 of those people were to go and buy positions, you can see how this can start scaling and adding in new buyers into this position. And unfortunately, retail investors aren't that well educated. And so they don't care about pullbacks. They're just like, right, I want in. Fear of missing out is so high. I'm seeing guys jumping in at the highs of this with like 5,000, 10,000 positions. And you're just like, what? You're not even waiting for a pullback. You lot are crazy, but they don't care. They just want to be involved, want to be a part of the hype, the movement behind it. So I think it's a very exciting time that we're looking at here. And it's really interesting from our point of view, just to see how this unfolds and what sort of aspects we see coming out in the near future, especially on new targets. And, you know, Elliot was talking about how Elon Musk has got a lot of power on Twitter. Well, these guys are now on Twitter and they're building up an audience. So I wonder how that's going to pan out in the future as well on that front. But guys, obviously, this is our first video back. Super exciting one to get back involved in the markets. So yeah, we're keeping a close eye on GME. I'm not invested in GME. I'm invested in AMC. And I think that that's got a bit more movement to go in as well. So guys, be cautious out there. This is sort of a movement that we're seeing of a whole, they used to call it smart money in the hedge funds. I don't know if they can call it that anymore, because they're actually having to change the way that they operate. They're not announcing their short positions anymore. They're changing their biases to long only, and that's due to retail investors. So are we seeing this whole terminology of smart money getting disappeared now and moving away? These guys don't care if they were on the borderline of bankruptcy. They don't care how much debt they've got. And the fact is that, GameStop now and AMC are selling shares internally to be able to survive. They're getting, huge amounts of money off the back of their new share prices, and this ultimately gives them power. And if anything, GME now, Elliot, they're probably in a position where they could sell their shares and actually look to acquire other businesses. And that's crazy that they're in that scenario, but they genuinely are. They'd be like, look, we're going to sell some shares and we're going to acquire X, Y, and Z.
It'd be interesting to see when they come out what they say, and what they do, what their plans will be. It'd be interesting.
Yeah, I mean, if they came out and they said, guys, thank you so much for your support. Share price has now pushed the market cap to 20 odd billion, whatever, and we're now in a scenario where we look to acquire companies. Obviously, Wallstreetbets is heavily behind us as a company. We're going to put a poll together with the Wallstreetbets founder on there of which companies we should look to acquire. So if you're interested, get your votes in. Oh my God, could you imagine how much value that would add? They're basically creating a global movement and taking into consideration the retail investors. That would just be a slam dunk win, I think. And these guys would just be able to go and acquire, winning businesses based off the fact that they've got the backing of 6 million investors.
Yeah. Mad.
Absolutely crazy. So guys, that's a wrap from us on our weekly FX forecast, index forecast, and hot penny stocks, I suppose. So guys, don't forget to thumbs up, comment, and subscribe, and we'll obviously see you in the next episode. Take care, guys.